In this video, we're going to show you exactly why the market is going to collapse in the next 11 days. Today is October 28th. I'm going to break down specifically the chart patterns preceding to this magnificent drop. And the reason I say magnificent, because for those of you bears out there, we live for opportunities like that to short the hell out of the market. And guys, this is not one of those sector rotation type situations. I'm going to break it down for you in terms of chart patterns. I'm going to break it down for you in terms of behavioral patterns that are evolving in the markets, which we have not seen in a very long time, literally close to 3 years. And before we move on, I'd like to summarize this, that it's not about the news, it's not about the earnings, it's all about institutional investors' reactions to the earnings reports. There is one behavioral pattern that we're observing right now that communicates to us that this is absolutely the top of all tops in the market that we have ever seen. Let's call it the mother of all tops. And understanding that it's the top clearly can position you properly to trade this market. On this channel, we'll trade weekly options, short-term expiration. So with that, I'd like to summarize it in a simple way that at times they are the institutional investors. At times they buy in the expectation of something great. At times they sell in the expectation of something worse. At times they all get complacent, and when they wake up, they all start selling at the same time, simply because they don't want to be the last one to sell. This is the psychological stance of the institutional investors. So a lot of times, as an individual trader, you look at the market, you look at the charts, you look at the news, and unfortunately, psychologically, you're just glued to what's happening right now. You want to simply know, well, why did this stock drop today, or why did this stock go up today? That is absolutely worthless information, because the real question to ask yourself if you want to succeed in the markets as a trader is, what is about to happen next? Because that is the very fact that will get you paid. So pay very close attention to this stuff. I actually typed this stuff out, guys. I don't like to type, damn it. So this must be important if I have taken my time. So let's proceed to evidence part number one here. And I call this the BS. And the BS, I named this because I wanted you to remember. I wanted you to wake up tomorrow morning and still remember what the hell was in this video, because I'm doing it with intent for you to remember. Take this information and put it to good use to grow your account. So BS means that the market is full of BS right now, just like it was in December 2017 and January of 2018. BS was beginning with a Bitcoin setting its all-time high. Well, the market conditions are clearly the same right now. It's just set all-time high at 67K. We're about to glance at the current market conditions, which match this chart pattern 100%, guys. It is absolutely freaking amazing how history of certain patterns will communicate to you what's about to happen next. So just to refresh your memory, okay, this is a chart of Bitcoin. And this right here, overlapping it, is the chart of S&P 500. So Bitcoin, S&P 500, for short BS. Remember this setup, guys, because what it really tells you is back in 2017, the top in Bitcoin was a predecessor to the top in the market. Now, let me break this down a little further. The market in Bitcoin was running higher and higher and higher in expectation of what? Yes, the major announcement of the beginning of Bitcoin futures trading. Now, very similar conditions right now in the market, as very high expectations were bet on the fact that Bitcoin was going to start trading its first ETF, and that indeed happened. And at this point, Bitcoin just ran out of juice. We're going to glance over a few charts of that in just a moment. But just remember the fact that a lot of investors at the time that were not institutional investors, but the herd, the majority, okay, were expecting great things to happen to Bitcoin, and they were buying it in the expectation of something great. And what happened is clearly anybody that has watched Bitcoin go higher and higher and higher, they got in at the damn top, and nothing great happened to them. They lost a bunch of money. And when you're down 50%, what do you want to do? You want to sell. So you sell at the worst possible moment. But the key criteria for you to memorize out of this BS is the whole world was expecting Bitcoin to go what? Back then in 2017, they were expecting to go to 500K. back then the rhetoric about the market moving higher was the fact Trump at that point was cutting taxes, and so that was going to be highly favorable for the market. And the market was making basically all-time highs almost each and every day. That is a mirror reflection of what's taking place in the market right now, as far as the market making new high pretty much every day. We're going to glance closer at that situation as well. But basically, Bitcoin was running higher, set a top first, dropped, didn't even bounce to the prior top. If you look at this closely, I mean, this is a nice head and shoulder formation right here with a clearly defined top, followed by a further drop in Bitcoin right here. Now, shortly after Bitcoin tops, we have a similar situation in the S&P 500. It tops out, sets a double top right here, guys. Can't see it, it's a longer time frame chart, but top one, top two, this has a great deal of importance, so pay close attention to that on some other charts I'm about to bring to your attention. And basically, then the market drop. And so there is a divergence going on here, right? Bitcoin begins to drop, makes a small bounce, which is the bounce that you would typically want to short. The rest of the market completely ignores what's going on with the Bitcoin and continues marching higher until it sets a double top. Remember these conditions. So Bitcoin runs up in the expectations of something great. It begins to drop. It never revisits the high that was set. It makes a bounce and a further collapse. And yes, that was indeed a collapse, because Bitcoin literally collapsed by like 60% within a short amount of time. And market did a very similar move. So it's not the fact that something is dropping, but it's the fact that it's dropping within a very short amount of time, which allows you to make a killing when you trade short-term weekly options on something. So hopefully you understand the conditions. Bitcoin sets the top. Shortly after that, market sets a double top, and then the market crashes, and Bitcoin continues to go lower. Fast forward to what is the catalyst to all this? Well, the catalyst that we are in front of today, that nobody is talking about yet, but they will be clearly next week or maybe tomorrow on October 29th. It's the fact that we've got one of the craziest Federal Reserve meetings that has to do with Federal Reserve BS that's going to have to be called, meaning they can no longer say that the inflation is transitory. How's the inflation is transitory? Oil prices has moved from negative 39 to positive 85. Federal Reserve is not in a position simply to raise interest rates. Okay, so they keep coming with this BS. Well, the inflation target is under control. Well, but the inflation is transitory. And what are they going to say this time? What I'm saying is Federal Reserve in a situation of a checkmate, and they're not going to be able to BS themselves out of this situation. And the market is not going to be able to BS Bitcoin, S&P 500 itself out of this situation of a major drop in the next 11 days, which could be followed through on even a bigger drop. So don't be betting on the Santa Claus rally as they're trying to portray in the news. They've been wrong many times before, but they always bet on the Santa Claus rally. And they do that because they don't have the 13 market move sequence, which helped us nail a major crash in the markets back in not just in February of 2018, but also in October, November, December of 2018. Guys, if you don't believe me, go check out the charts. We've nailed it. Go check out our videos. So to basically describe exactly what's going on right now, the chart I've shown you dating a few years ago, the current circumstance is this. So this is the Bitcoin top. Right here, we posted a video saying, hey, short Bitcoin right here at about 63K. Now, the next day, Bitcoin jumps. And so clearly everybody that believes, oh, Bitcoin is going to 100K right now. I'm not saying Bitcoin cannot go to 100K. I'm just saying current conditions spell out a major drop for Bitcoin. And by the way, guys, if you were a part of the alert group, you would have received an alert right here. Say, add short. We didn't nail the top at 67,680, but we did recommend shorting Bitcoin at 66.6 and 66.8. Those were our last entries on Bitcoin short. And as you can see where we're going with this, it's a major head and shoulder formation. So can we get a bounce back to 63? Sure. But we're likely to stall somewhere right around here, which would be in line with the shoulder before a major drop right here. Now, how low can we go? I'll tell you right now. We could be going to 49K to 59K on BTC in a very short amount of time. Again, it's not the size of the drop, but when you combine the size of the drop within the short time frame, that's the stuff that makes you money as a short seller. So the conditions are such that Bitcoin has set a top, just like it did in this chart that I've pointed out to in December of 2017 on similar catalyst. This time the catalyst was the Bitcoin ETF, right? Last time it was the Bitcoin futures. This time it's the Bitcoin ETF. As I mentioned earlier on the first slide of this video, is sometimes they buy in the expectation of something great. Well, this something great has happened. So what is the next catalyst? Until we get a next major catalyst for Bitcoin to go higher, it's got every scenario for people to keep selling. See this sharp sell-offs right here, represented by these red candles. Sharp sell-offs right here, gap downs right here, sharp moves lower right here, guys. People are getting out, and this is just a beginning of people getting out. So we can easily get about a 10, 11K move lower in Bitcoin in the next 10 days easily. Okay, so, but it could begin as early as tonight. It could begin tomorrow, over the weekend. So what we got in response to this Bitcoin action, or at this point, let's call it irresponsive of what Bitcoin is doing. This is what the market is doing. This is S&P 500 /ES, which is S&P 500 futures. And so we just set a top. Remember, I told you about a top. This is a top one. This is a double top, literally within half a point, a quarter of a point. Okay, we almost revisited this level that was set pre-market about 72 hours ago. We revisited that level. We failed that level. And so at this point, this is a double top formation. Now, let me overlay these two charts on top of each other, and this is what we've got. We've got BS, the same formation that we have had in December and January of 2017 and 18. So what we've got is Bitcoin sets the top first. Pay attention, okay? It drops. It bounces. This was a short opportunity on BTC right here, okay? And then it drops again. It bounces. It drops again. Overall, where are we going? We're going lower on BTC, setting a series of lower highs, okay, on BTC. So this is a solid downtrend. The trend has reversed in BTC. The major catalyst, which was the ETF, has already been played out. And at this point, we're moving lower. Now notice that it doesn't matter what Bitcoin is doing, just like in the historic picture I presented you with, okay, market just sees no run. It keeps moving higher and higher and higher until it sets what? Until it sets the first stop right here at 45.90. And then today it sets the second top right here at 45.89.75. And so the next move, based off the historic pattern of the chart pattern, okay, is lower. And it's going to be a sharp move lower. It's not just going to be a little pullback. It's going to be a sharp move lower to the magnitude of a few hundred points over the next 11 days. We could see easily a 5 to 10, possibly even a 15, maybe even 20% drop. So the pattern is such, BTC moves lower, it tries to bounce, but the market just ignores this fact and just keeps moving higher and higher until it sets a double top. So let me show you this chart one more time. See how it's exactly the same chart. Different time frame that we're looking at, but the pattern, I want you to focus on the pattern. Bitcoin goes higher, continues to move, to make lower highs, right? Lower highs. So overall, it just keeps going lower, 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 while the market keeps going higher, higher, higher until it does what? Until it comes to this double top formation. The double top formation in the S&P 500 represented by this double top formation right here. The next move, based on the historic chart pattern, is not just a move, it's a sharp move lower, with just one exception, that this green candle, while the market tries to hold its equilibrium, will get multiple days lower. If we're to count them exactly, it's about 10, 13 days lower, which wouldn't be surprising. Why? because let's glance at the current chart of S&P 500 right here. SPX daily chart, and I do have some proprietary numbers set right here for moving averages 8 and 13, which are useful for shorter time frame type trades. And so what we have right here is a clearly defined double top, okay, and we have a situation where basically everything is so bullish that it's about to do this. It's about to repeat this sort of scenario and have. See how bullish everything was here, and then the blue line crossed lower. So about to have the blue line cross lower. See how bullish everything was right here, and so we're about to have the black line cross the orange line. So that's in not so distant future. I'm talking in like next 3-4 trading days. We can have a substantial trend reversal type opportunity in the markets. So substantial trade reversal type opportunity, especially when you calculate the number of days, right? So the market's been up now 1, 2, 3, 4, 5, 6, break even 7, 8, 9, slight move lower yesterday, which we traded from 5K to 42K. If you haven't seen that video, check it out. 13, so 13 days higher, guys. Very rarely does the market continue to move higher beyond 13 days. It could go 14, 15, but I mean, we're there. And so the sell-off yesterday with a move 6 formation into the close of the trading session basically tells you, hey, it's over. Guys, it is freaking over. This is the official market top. We're going to call it at 45.96. 13 market moves. Does it again. Damn, Neil, another market top. Fuck, how do we do it at 13 market moves? Guys, the truth is you can do it too. And if you're not sure how to use this information to make a killing in the next 11 days, guys, make sure you schedule a coaching call with a senior trader here that can answer a lot of these questions for you. Now, let's glance at the next index, which is NASDAQ, and very much a similar formation with diminishing volume, divergence on the volume. One thing I didn't talk about, which was also present in the chart of S&P 500, was the fact that the ATR, or your average true range, your DTR is what we call it at 13 market moves, your daily trading range, is diminishing while the market is going higher. And typically this sort of circumstance happens right before the ATR is actually going to skyrocket, but ATR does not tell you the direction, right? It's the rest of the story that tells you the direction. It's the rest of the behavioral and chart patterns that tell you the direction. Direction is about to reverse and move lower. So we're about to get some major outsized moves lower in the markets based on divergency in the 13 market move sequence that we study. And it's not going to be a rotation. Again, it's not like they're going to sell the value stocks and go into technology stocks. It's not like they're going to sell technology and go into value. It's not like they're going to sell some stuff in Dow Jones and go into value. So this is a beautiful, lucrative type setup with a market top on Dow Jones, guys. And trust me, it's not going higher. Okay, it's not going higher. You've got a situation where you've got Amazon, which represents a good bit of the indexes. It's earlier today. We were trading it on the call side, knowing that they were going to do what, guys? All this stuff is that they were going to buy it in the expectation of something great, which was the earnings report. Okay, and so understanding that institutional investors like to buy ahead of what they perceive to be something great. But it didn't work out to be something great because Amazon, last time I checked, was about down 120 bucks. So nice for us because we actually cashed out on Amazon exactly at $34.79 today. So we rolled it for a $70 profit when it opened at $34.10. We rolled it all the way to the top of this candle and we cashed out. And guys, it's a beautiful trade. Anybody could have partaken it if you understand the psychology of what institutional investors do. Sometimes they buy in the expectation of something great. Something they sell in the expectation of something worse. And that's what we believe they're going to do with S&P 500. They know the Federal Reserve is in checkmate. They will sell the hell, and we believe they're going to start selling the hell out of S&P tomorrow, October the 29th. Why? They're going to sell in the expectation of something worse, meaning What kind of story can the Federal Reserve come up with next Tuesday and Wednesday? The Federal Reserve is checkmate, and they're going to start selling the market tomorrow on October 29th in the expectation of something worse. This is a great example of Amazon and institutional investors buying in the expectation of something great. And now everybody's getting out with the speed of light on this trade after hours. So let me basically summarize another very, very powerful behavioral pattern that we are currently observing during this earnings season. Now, this has not surfaced in many years, guys. And the only way you would know that if you traded the market for years and years, and you would pay attention to some of these behavioral patterns as we do here at 13 Market Moves. And I'm not referring to here whether the stock is going up or down the next day after the earnings report, clearly. Okay, something can drop or go higher the day after the earnings report. What I am referring to is the fact the night of the earnings report. Now, some companies announce earnings in the morning before the market opens. Some companies announce, most of the major bigger companies, they announce at 4:15, 4:30 p.m. Apple typically announces at 4:30, right? And a lot of times, if the earnings are good, okay, you would expect the stock at any other circumstance to just rocket. Right after 4 p.m. when it announced earnings, you would expect the stock to rocket if it beats on earnings, if it beats on everything. And especially like crazy stuff like Google. Not only did it beat on absolutely everything, and the numbers are just absolutely freaking out there. This is like the best quarter that Google had, but it's also the third best quarter that Google has ever had. And what happens during the earnings report, what I'm referring to again, is not what Google does the next day, not what Google does the following day. I'm just saying what Google does at the moment of the earnings report. On one of the greatest quarters, it goes down, and it goes up, and it sort of does this. Basically, what it does nothing, okay? It just goes sideways, okay, after the greatest report in the history. It just goes sideways. It does absolutely nothing, all right? In the CMG, right, if you go back and you study what CMG did, we all know what happened after the next day. But if you look at the immediate action, right, institutional investors, it does nothing, okay? So that's why the strategy of selling a put on the call has been popular this earnings season, because, hey, these stocks are not moving anywhere. The next morning when the market opens, they basically open up when all the information is already clear and available to the marketplace. They open up at exactly the same place where they closed the day before, which should not be happening, right? Because all of these earnings, they're phenomenal and they're great. Now, Facebook, despite of the controversy, still beats the earnings, right? What does it do? It does nothing. It opens up right about the same place where it went into the earnings report the day before. What does this behavior tell us? Well, this behavior tells us a story that institutional investors, okay, they are highly indecisive. Okay, the reason why Facebook didn't go higher, then sell off, right? The reason why we didn't get a major move in Google until the market opened. Like, look, even Tesla, right? It doesn't do anything the moment it reports earnings. The earnings are phenomenal, okay? But even Tesla does this. The moment it reports earnings, and like it trades plus minus $10 all night and all morning. When the market opens, that's when they start buying it up. And so what that behavior tells you on some of the greatest earnings report like Google and Tesla and so on, and even CMG had colossal report, the institutional investors, they're highly indecisive with what are they supposed to do. The earnings reports are great. They are the greatest in the history of all of these phenomenal companies. However, how should they trade them, right? It's the reaction that matters. And the fact that these stocks are not making any moves after the earnings information is already released is telling us that they don't want to be the last one to buy. And let me explain that. So sometimes the stock will run higher and higher and higher in the expectation of what, something great. And so they don't, like, look, the company can have the best earnings report ever, and it can do this. It has nothing to do. Like some people, maybe they bought it right over here, and so now they're happy to collect gains right here. Right? Some people bought Bitcoin at 32K when we said to do so, like a few months ago, and now at 67K they cashed out. Okay, there's nothing wrong with doing so. All right. So some people are just going to sell. They're going to use the strength in the stock to sell. So sell into the strength of the stock. And the fact that they're not sure, should they sell, should they buy? But one thing is clear, that the market is highly indecisive. And this sort of behavior on the best earnings report, they're not selling, they're not buying. It's because they don't want to be the last one to buy, meaning they don't want to think that, okay, earnings report is so great and all this good stuff is going to continue right before something does this. And so they're basically waiting to the market to open to decide, okay, do they want to buy, do they want to sell, and they don't want to be the first one. It's just like a kitty cat, trying to put their paw into the water. They just want to just touch it a little bit. They like measure the temperature. Hey, what's going on there? Is it safe? Is it still safe to buy here? Basically, this is what institutional behavioral pattern is telling us. Is it still safe? Should I still be buying? Or is this the top? That's what all of them are thinking right now. Nobody's telling you this, okay, besides 13 market moves. But we study the psychology of the markets each and every day, and this is a major change in the markets that we're seeing right now. And the biggest problem with institutions is they certainly don't want to be the last one to sell. So the earnings reports could be good. And if others are selling, well, what are they going to do? They're going to sell too. And so they don't want to be the last one to buy. Neither do they want to be the last one to sell. And that equates to a market top. So let's glance at a few more charts. So basically, a lot of times you would actually interpret the behavior of a stock running into the earnings report as actually highly negative, because it would easily reverse and it would drop after that, such as in case with Amazon. Another example we've got tonight is Apple, where clearly Apple runs higher into the earnings report announcement today, and so after market, Apple is down huge. And now, that was not a surprise to us, but it was a surprise to a lot of institutional investors who've been running the stock from 140 all the way to 152. Well, now, short-term wise, it was down to 140. I think it's around 146 after hours. So, major drop in this, guys. Amazon, Apple down. They're going to be down tomorrow. There's no way S&P 500 is going to be able to squeeze a move higher, unless these stocks are going to reverse for whatever reason, and they're just going to say, well, hell, we don't care. We're just going to buy them anyway. So there's a little leeway that we can give towards that. But bottom line, S&P's got a 90% chance of actually beginning a major drop tomorrow, which is going to be accelerated. So this phenomena of the market moving higher 13 days in a row would be similar to Amazon or Apple stock running into the time of the earnings report. Well, the market has run up at this point because of the expectation of great earnings reports from many companies. 25% of the companies announced their earnings this week. Based on that, this is what we were able to do. The market is running in the expectation of great reports. Well, now this trend is reversed with better reports from Amazon, with better reports from Apple, and the market at this point, after running 13 days higher, it's got a very high probability of actually moving lower in the expectation of something worse. So the focus is going to shift from the earnings reports to actually trading the Federal Reserve next week. And here at 13 market moves, we believe there's a 90% probability that the market is actually going to sell off going into the Federal Reserve announcement. I'm going to show you something here that's going on with Bitcoin and some other altcoins, guys. By the way, if you haven't set up your trading account at Fimex, guys, make sure you click the link below and set up your trading account. Bitcoin is about to give us a wonderful trading opportunity. As you can see, this is the top, this is the head and shoulder. We're about to get a beautiful, beautiful move on Bitcoin. You see the blue line already crossed the orange line right here, short any bounce in Bitcoin. We're about to go easily to this level of 50K, maybe even 49K, guys. 47.5, it's possible, and in a very short amount of time. Now, some of the hot coins that have been incredibly hot lately, such as Solana. All right, guys, they're staging a failed breakout. I mean, this is overall a highly, highly bullish chart, but not when we look at some divergences on this chart, not when we look at a failed breakout from a cup without a handle potential right here, not when we got MACD showing bearish and the ATR is decreasing while the stock is trying to move higher. Guys, this is the recipe for actually a leg lower in this name right here. So we're seeing Bitcoin making some bear patterns, clear trend reversal. That's not clear to the rest of the market, but clear to us here at 13 Market Moves. When some of the hot names are showing definite divergence between RSI and volume characteristics, and when they're showing crosses on MACD and 8 and 13 moving averages, guys, this trade is easy. And if you don't know how to make 5x trade out of this, guys, make sure. Okay, number one. Okay, you click the link below, you schedule a call, sign up at Phemex so you can trade with our group, guys. These market opportunities, they don't come around every day. And if you're curious beyond Bitcoin, maybe you've never shorted Bitcoin. You're like, why the hell would I want to do that? I just want to hodl it. I just want to hold on to it. Well, how would you like to double or triple your Bitcoin by being able to short it right here, ride it on the way lower, and being able to buy more Bitcoin? If you're using even a little bit of leverage, guys, let's say you have 3 Bitcoins right now. You can sign up with us. I can show you how to turn this type of pattern formation into your account, going from 3 Bitcoins to 6 Bitcoins, 9 Bitcoins, 12 Bitcoins in the next 12 days. If you're interested in knowing how the hell to do that, guys, don't wait another moment. Go to 13marketmoves.com or 13mmtv.com and schedule a phone call with a senior trader here, guys. Guys, the market crash is on its way. Whether you like the idea of it or not, your goal as a trader to make money from patterns that are highly repeatable. And if you'd rather do it with us, then do it on your own, guys. We invite you to do so at 13marketmoves.com. I'll catch you guys in the next video. Let's roll.